Hello everyone, I hope you all are doing good. Today I would like to share some inputs regarding the market outlook for the month of June 2022. As all we have seen that the market was very volatile in the month of May as that the inflations are increasing globally. In the domestically also that the market was very volatile. To control the inflation, that the central bank has taken the action. In the first half of the month, that's a global market has given the negative return, but afterward it's a growing. And other things, some events also happened in the month of May. Let me share the screen first so we can just go through the presentation on the market outlook. In the month of May, that RBI has issued there's a print, its inflation number that is at the 7.79%, whereas in the month of March it was a 6.9% recorded. Excess mutual fund, two fund managers has got for the fund running cases, and RBI and Fed both increased their interest rate. Fed chairman also announced that they will increase further, interest rate further by 50 bips. And we have seen that the dollar has touched all-time high again. India foreign exchange reserves also fell down as there's a depreciation of the currency, as well as the other things like crude oil price increasing. Apart from this, FIR are pulling out money from the market. These are the reasons that the foreign exchange reserve has impacted. Government of India has reduced import duty on the some raw materials used in the manufacturing for the steel while imposing an export on duty these import. And central government is pushing to state government to increase the expenditure on the infrastructure. Whereas other thing that the wheat export has been banned from the India, that impacted the earning of the farmers lots. And move to the global market as that's a emerging market were slightly volatile in the month of May, whereas a developed market has given positive returns. China has given 5% 5% of return, whereas India has given 3% negative return. EU has hardly given any return. And this is a movement of the Nifty 50 along with the event happened from the since 31st December 2021. The first event has happened jump, that's a global yield jump. Oil hit 7-year high, and in the month of February, crude oil crossed 100 barrel 100 100 USD per barrel. And in the end of the February, Russia launches attack on the Ukraine, and afterwards that crude oil again topped at the 150 USD per barrel. And in the month of May, the RBI rate hike. RBI increased the rate after that's 1st of August 2018. That time RBI increased interest rate 25 bips to reach that level 6.5. Afterwards, interest rates were continuously decreasing. This is the after first time since 2018 that in RBI increased the rate by 40 bips, and today also in RBI has increased the rate by the 50 bips. Now repo rate has been your 4.9%. This is the movement of the indices, the Indian market. That's Nifty 50 has given the negative 3% return, whereas the small cap has given 9% of negative return during the month of May, and mid cap has given 4.76% of negative return. These are the sectoral indices, and auto has given the positive return of the 5%. The reason is for there's a shortage of the supply and demand is very high in the auto sector. And for the FMCG, as the commodity prices are increasing, so that's FMCG companies are making the profit. And this is a commodities performance during the month of May. That's a crude oil has given the 13% of absolute return, whereas silver has given a negative return, and gold hardly make any return. And this is the import-export comparison. As we all know that we are the very high in the import of oil, but we are high on the export. That's surpass the our oil importing. IT export surpass oil importing. So there is a gap of the highest. It is a $42 billion of gap between the. There is a difference of import, export, and import. But there's a second chart represent that Indian forex reserves has continuously falling down from the month. It's falling since from the month of the February 2022. This is the that crude oil is also the reason, but apart from this, that's a FI also pulling out money. So this is also impacting our forex reserve. This is the FI and DI. That's an outflow chart, as FI is continuously pulling out money, and DI is also continuously investing money in Indian market. But that the net on net, there's a pulling out money from the stock market. This is the Nifty 50 P ratio chart. This is a historical P, and on 31st May, that's it was a P of the 21.87%, whereas there's a 5 years average Nifty P stand for the 27%. Still, we are very low of as per the comparison of the 5-year average, and 10-year average was the 24 PE. And so it shows that we are there's a in very good position, that market is fairly valued. So it's a good time to invest in the equity market. This is Nifty P earning per share chart, as the blue line shows the movement of the Nifty 50, and whereas the pink line shows the earning per share of the Nifty 50. And right now we are stand at the 800 earning per share, and these numbers are continuously increasing since the last year. And this is the inflation movement as per the recorded in the month of April. Inflation stand for the 7.69, and right now there's a number for the May has not come out. So this is last recorded is 7.79% of the inflation, and central bank is taking measures to control the inflation. This is the yield curve comparison for the Government of India bond, and we on 31st of May, that the GSEC yield stand on the 7.41%, and there's a upward movement as compared to the previous month. And United States yield curve chart also represent that the in the end of the month it was stand for the 3.69%, 0.69%, whereas earlier that's a previous month it was stand on the 3%, and there's a huge gap between 6 months ago. Sorry. This chart shows the composite PMI index, as in the month of May, that's a PMI also increased. Earlier it was stand at the 57.6, whereas in the month of May now it has 583%, 58.3. Both service sector and that's a service sector increased in the as per the previous month, but there's a slightly down side in the Manufacturing PMI. Earlier it was stand for the 54.7, but in the month of May it was a 54.6. But composite has been that's increased. It shows that the increase that's a in that India is in the growth situation. There's a improvement in the growth, improving and growing economy. Outlook for the equity index, that's in the rising crude oil price, high inflation, geopolitical tension will keep the market volatile. We will see further decline. That's FI definitely pulling out money till that Fed increasing the interest rate in the US. Fed will start balance sheet restructuring to suck out excess liquidity in the market that make the market volatile. Sector like the auto, bank, capital goods, infrastructure remain positive. And with the interest rate hike, there will be pressure on the medium to long-term bond, duration bond. So it will be preferable to invest in ultra short duration, low duration, or the floating rate bond funds. This is thank you for this time, and I hope you will doing good. And for the investment purpose, you just keep your goal invest as per your goals. So happy investing.